Good afternoon, everybody, and welcome to our latest Meet the Management podcast. My name is Marc Ashton. I'm CEO of Decusatio, and as many of you know, one of my key interests has always been around finding stories and investment opportunities that exist outside the top 40 on the JSE. We've done quite a lot of coverage of both listings on the Cape Town Stock Exchange, the old ZARX, JSE, and some of the venture capital funds. Infrastructure is obviously an incredibly topical subject at the moment, and we're very fortunate to be joined by Renier, MD of GAIA, and Hendrick, Snyman, the CIO, to talk about their listing on the Cape Town Stock Exchange and some of their history. Renier, I'm going to start with you. A little bit of who are you and what's your background?
Hi, Mark, and hi, listeners. Thank you. I'm a Managing Director of GAIA. I'm an actuary by training, but spend most of my life as a businessman nowadays. I've been with the GAIA Group for about 6, going on to 7 years now, so quite a bit of time. Before that, with the Snyman Group, working across Africa, and very passionate about making a difference in our country and on our continent.
Thanks, Renier. Hendrick, yourself, your background?
Thanks. Yeah, I'm the Chief Investment Officer. I'm both an engineer by training and I've also done Masters in Corporate Finance and also a PhD. So I enjoy, sort of the lecturing component of teaching people about a new asset class. I've been with the firm for about 7 years since we started doing our first renewable energy transactions in 2015.
I think that the discussion around a new asset class is so topical. I mean, people are really interested in the world of infrastructure at the moment. It's so topical, whether it is renewable energy, whether it is water, roads, fiber, pick something. There's a huge opportunity in the world of infrastructure. Renier, I'm going to throw this to you quickly. I mean, maybe just take us through a little bit about who the business is and what the listed assets comprise of.
Yeah, so GAIA is a fund manager. We're based in South Africa, but we work in sub-Saharan Africa. We essentially bridge the gap between infrastructure assets and also agribusiness as the two verticals, but predominantly sustainable infrastructure and our investors. So we give investors, private capital, the opportunity to invest in this growing space of sustainable infrastructure, and then look after their money and make sure that the investments that we pick and that we invest in work and work better than what we originally expect, so we can make it a successful investment for them. In terms of GAIA's history, so I mean, we were born out of a renewable energy developer. We've managed to conclude transactions nearing $300 million now, specifically in the space of renewable energy, transportation assets, so toll roads, and then also digital infrastructure, which is essentially fiber optic networks. And our investors are typically pension funds, life insurance companies, institutional asset managers, and then also collective investment schemes, and then going a little bit more retail, some family offices and high net worth investors.
If we look at your assets that are listed on the Cape Town Stock Exchange, there are a number of assets that are listed there. Maybe just want to take us through what, if somebody looks at, you've got some ordinary and pref shares, you've got a couple of the fiber REIT. Maybe just take us through just an overview of what those assets comprise of. So, if somebody's looking for access to a specific asset class, what are the options that are there?
Yeah, 100%. So we've got the first asset that we listed in 2020 was called GAIA Renewables 1. It's a listed company as well as listed preference shares, which then have what we utilized to acquire an indirect stake of 16% in a Tsitsikamma community wind farm, which is a large renewable energy IPP project that's delivering power to the grid based in the Eastern Cape. That was the first project. Then we listed GAIA Renewables GAIA Fibonacci Fiber REIT, in December 2021, with a specific focus on fiber networks. It's listed 2 rounds of preference shares, each of about 150 million, which then acquires individual fiber networks throughout the country, where ISPs then utilize our networks to deliver fiber connectivity to homeowners. and investors get the opportunity to invest in those fiber networks, and we pay them dividends through the preference share. Our latest listing, which I think is what we're talking about mostly today, is GAIA Renewables REIT, which is specifically focused on renewable energy for commercial and industrial clients. So businesses needing bespoke energy solutions to cope with the biggest issue at the moment, which is load shedding. And we, in such a way, are able to reduce their risk, give them energy security, and also in many cases give them a lower price for their electricity, also in a sustainable way.
One of the things I've known, I mean, and this is we'll kind of get more into the Cape Town Stock Exchange side of things shortly, but one of the challenges, if you look at it, is obviously liquidity. I mean, by the nature of the assets that you are listing, these don't seem to be something that the average retail investor is naturally participating in. There isn't a huge amount of market depth from that perspective. Maybe just give us some insight around what the real intent behind listing or value behind listing is, if it's not there naturally to create a secondary market. I mean, maybe just talk us through your thoughts there.
Hendrick, you want to take this one?
Sure, not a problem. Mark, we worked for quite a while with asset allocators and fund managers to understand what their needs are. And what we found was that a lot of the collective investment schemes wanted access to alternative assets. But the way in which they could access alternative assets as an asset class, like which infrastructure is one, was not aligned with how they typically transact. And it didn't address the shortcomings of certain, like, for instance, private equity funds within their scheme. So the allocation was, by virtue of the collective investment scheme act, very small. And they didn't have control, for instance, over the valuations in private equity funds. So we said, what are the shortcomings of private equity funds and the listed environment, and how can we actually, working from a fundamental base of zero, build them something that they can invest in and would only attract advantages. So we said we wanted the transparency of the listed environment. We wanted to address the shortcoming of valuations from the private equity space. And we wanted to provide them with the necessary governance comfort within the listed space as well. And so we developed this idea of listing a preference share, or effectively a platform on the Cape Town Stock Exchange. That platform lists pools of capital, which effectively each one is a small fund. And that pool of capital invests in a number of assets, and on a flow-through basis, the preference share distributes all the income from those underlying assets to those investors. We do it as a preference share, which then, by virtue of it being an obligation from the company, the investor at any point in time has got full sight of what the underlying cash flows are. So the price discovery process between a willing buyer and a willing seller is very much transparent, rather than on the JSE, where it's ordinary shares, they have to allow for the risk of being wrong. So the discount rate has to increase quite a bit. So from their perspective, the platform and the instrument fits within collective investment schemes. It's not actually earmarked towards retail investors. It is supposed to be a tool within a collective investment scheme that they can use as part of their building block of a portfolio to actually fit within their mandate or within what they are trying to achieve. So the best way for retail investors to gain access to this is to invest in collective investment schemes which have recognized the value of alternative assets, recognize the value of infrastructure and what they can do with it, and how they can harness this, the cash flows that emanate from these assets and diversification benefits within their portfolio.
And maybe just taking us through, I mean, I know there's been, it's always been one of those contentious points around innovation in the JSE space. And that's why it's interesting to see how the Cape Town Stock Exchange has evolved. I mean, maybe take us through your interactions with the Cape Town Stock Exchange. What do they do well? I mean, you guys have obviously got a history with them. What do they do well? Where could they improve? I mean, I know that there's this new impact board concept that they put together. Maybe some color in terms of that?
Sure, not a problem. So one thing one has to remember first and foremost is that exchanges are self-regulating bodies. They have to adhere to one rule, and that is they have to adhere to the Financial Markets Act, and the Financial Markets Act is all about providing transparent, up-to-date information to all the stakeholders. Okay, so typically exchanges would say, listen, we can only list instruments with a certain amount of free float, because that's how the business model is based. To say that upon trading of shares, the exchange makes money. The Cape Town Stock Exchange are ex-JSE, well, large contingent of ex-JSE executives who perhaps recognize the shortcomings of the JSE in the same manner that Capitec saw the shortcomings in the large behemoth banks. You know, that if you were to start from scratch, you would do it differently. You would be lean and mean. You'd use, technology to your advantage. And they said, how would they do it differently if they started again? I must say our interactions with them have been very good to this point. I really can't say that we found anything bad with them. They are innovative. They always go back to the core principles: is how is this being better for the market, better for the investor, and better for the country as a whole. So when we spoke to them about our listings, they understood where we were going. They looked at international precedent and they said, well, guys, we feel that this is something that ticks those various boxes. With the impact borders, again, I think that they are standing in the front, or they are ahead of their time in that sense, where if you look ahead in 5 or 10 years' time, people are going to say, I not only want to make money, I want to make money whilst doing good. So the impact board from their perspective is to say, for those companies that are willing, they will assess your investment thesis and your impact management system to ensure that when you are saying you're making impactful investments from a transparency and a regulatory perspective, there's no greenwashing that is occurring, and that you are reporting your impact according to a certain a level of or standard, as they are currently doing in Europe. So GAIA, about 2 years ago, was accepted by the International Climate Finance Accelerator in Luxembourg, and we made the commitment to be a full impact manager. We report according to Sustainable Finance Directive regulations, which is a EU regulation, and we're Article 9 fund. So we not only review our sustainability, but we review the impacts that our various investments are making, so that we try and bring to market data to the various participants as to what impactful investments are, so that in 5 to 10 years' time, there are more data points for investors to assess, rather than starting from scratch in 5 or 10 years' time.
Renier, I want to throw this to you. I mean, obviously, this concept of impact investing is picking up, and I think if we look at the challenges that we face in South Africa, it is energy, it is water, it's road infrastructure, it's healthcare. There are plenty of opportunities for impact investing in the country. What's next, and what are the opportunities?
Yeah, thanks, Mark. Look, I think the world of impact investing is in its infancy, and if we see the sheer amount of new capital flowing into the space, on a global scale, it really has meant that investors are woken up to the fact that they can't just invest for returns; they got to invest for impact as well. If you look at a pension fund, their members are essentially looking, they 30 or 40 years old on average, and in 20 years' time from now, they're going to live and retire in a space that's got to be conducive to living, and it's got to, we've got to live in a better place than where we're heading at the moment. And it's a case of saying, well, if we don't make a change now, it's going to be too late. So let's make our money work to attack the 17 sustainable development goals that are out there, with specific KPIs and specific targets. So it's been put together by teams since 2015 in terms of what we need to address, and you pick the specific areas where you feel passionate, where you can make a difference, and it goes from zero poverty to reducing inequalities, gender equality, to areas like climate change management and giving people access to clean water and clean energy. over and above other areas such as conservation. I mean, that's an area that is really growing quickly. Is, you know, how do we conserve the biodiversity that we have on Earth? So there are many areas, and I think it really gives, you know, if we go back 10, 15 years, alternative assets were the buzzword because people didn't understand, you know, they got to the idea that now we've got private equity as an asset class or infrastructure as an asset class. Impact investing is not necessarily another asset class. I believe our traditional asset classes are changing so that we're doing things for the better, not for the worse. And that's why you see global pension funds divesting out of dirty assets. You know, oil and coal power plants are not being funded anymore. And there is money going towards that. So GAIA's playing in a specific space where we've got the knowledge and we've got opportunities that we've prepared, and we want to give our investors the chance to invest in, you know, an asset that does not only watch what it's doing, you know, what harm it's doing, but it's also looking and measuring what good it's doing. So it's both looking on those sides and not just reporting in terms of what you're doing bad.
Last question from my side. You guys have just recently conducted a roadshow, investor roadshow, listing on the Impact board. What's been the response from the market?
Yeah, I think it's been overwhelmingly positive. You know, with something new, it always takes people a little bit of time to understand what this means and where it can fit into my portfolio, what its specific role is. But, you know, in South Africa, we've got an energy crisis and you know, we've got 10 gigawatts of energy shortage, so we need to fill that. The best place to fill it is in the area where you know, which grows our economy, and that's in small and medium-sized businesses. So we've picked this sort of medium-sized scale with energy intensive businesses, manufacturers, fast-moving consumer goods, hospitality, farming, so commercial scale agribusiness, where there's a real need for energy, and furthermore predictable energy, cheaper energy, instead of burning, you know, or not burning, but instead of starting your generator, which is now, you know, even more expensive on the day-by-day basis, and then having predictability in terms of the prices. So we play in that space. You have the ability to invest in a basket of opportunities. So it's not a single asset, it's a basket, so you get some diversification. And it gives the investor the opportunity to invest in an impactful space that is also good for the economy and for the people, and is going to generate decent returns. So I think it ticks a number of boxes, Mark. I mean, we go through due diligences with specifically institutional investors. They see the need for this. They understand the way we view the world from an impact investor side. And I think the discussions are very positive. So we're looking to grow this fund really big, which will be for the benefit of all of us.
I think it's an incredibly topical story, and I think it's one that we're going to be tracking and following for the next 10, 15 years. I think infrastructure is just one of those things that is just going to be a cool sector in South Africa, and I think that there's so many interesting moving parts to it. I'm very cognizant of time. Renier, Hendrick, thank you very much for your time, and we look forward to following your story and updating investors as time goes by. Thanks very much for your time.
Thanks, Mark. Appreciate it.